Hey, good morning, America. It's Angelo Christian, another awesome edition of Confirm and Send, where I actually read viewer emails and answer your questions. So I got a lot of emails I want to talk about today. We do this show every once in a while. We're actually pull up a lot of our viewer emails. There's some questions that you viewers had out. Thank you so much for sending the emails in. So I actually want to talk about these things. If you got a question for Angelo, you can actually email us at angelo@chihomeloans.com. Maybe you have a question. Maybe it's about getting a mortgage. Maybe it's an investor trying to buy an investment property. You can actually email me at angelo@chihomeloans.com. This is one of our episodes called Confirm and Send, where I actually read viewer emails and talk about and answer the questions for you guys out there. So I got a lot of questions here I want to kind of go over. So the first one is from Zach D. Thank you so much for sending this email, Zach. And you're talking about the commercial loan with no money down, 100% financing, and you're saying, I don't understand how it works. How do I pay off the second mortgage? That's a great question, Zach. Thank you so much for sending that. So if you're trying to get a commercial property, we have a program. It's a hard money loan where you can actually get 0 down, 100% financing. I'll give you an example of one that I did in Chicago a few months ago, and he bought a retail strip center. It was a restaurant, an apartment complex for $1 million. The seller carried a second mortgage for $500,000. So we gave a first mortgage for $500,000. The seller carried a second mortgage for $500,000. So when you add those two loans together, he was able to buy the property with 0 down, 100% financing. Now, it's a short-term 2-year bridge loan, so he has to refinance and pay off the seller. The seller's not going to stay on there forever. So basically what happens is we close on the deal, they purchase the property, and then he wants to stabilize, the building, get it cash flowing, and then we come in and refinance through the bank, usually within a year. So he purchases the property, we give him a first mortgage, seller carries second mortgage. Then in about a year, we refinance, we take out the seller and give him a new first mortgage with a bank loan with a very low interest rate. So that's how we pay off the seller. He's paid off through a refinance in the future and taken out of the picture. He's just there to help to be able to purchase the property with 0 down. Then once you take title of the property, you can actually unlock the equity, refinance, and then take the seller out and then get an ultra low interest rate through the bank. So that's how it works. Thank you so much, Zach, for sending that question. So, okay, so this is from Ed Mars. Thank you so much, Ed, for sending this message. You're asking about the biweekly plan and how does it work to reduce the duration. Okay, so Ed, thank you so much for sending that question. So how does it work? So when you're paying bi-weekly on your mortgage, what ends up happening is that there's 52 weeks in a year, but through your payment activity, there's when you do bi-weekly, you actually do 26 payments, but when you actually pay your mortgage, you actually only pay 12 payments, right? You pay monthly. So when you do bi-weekly, you actually effectively make one extra payment every year to the mortgage. So that extra payment that you make goes straight to the principal. When you make that extra payment to go straight to the principal, that keeps on happening. That reduces the amount of financing. So your finance charges will decrease because now that extra payment that you make every single year to the principal is actually reducing the amount of financing that you're going to incur over the life of the loan. So as a result of that, it'll go from a 30-year loan down to a 23-year loan because you keep on prepaying to the principal. There's no prepayment penalty on the loan. So the more you prepay to the principal, the faster you trim it down and you shave off that interest. So as a result, your effective interest rate will also be reduced by 75 basis points or 0.75% by paying off the mortgage faster. So great strategy, great idea to be able to pay your mortgage off faster is a rapid pay plan or bi-weekly to pay that mortgage off faster. So great question, Ed. So let's see here. All right. Okay, so this is a good question. This is from a few minutes ago from JZ, and this is in regards to FHA and USDA loans and being self-employed, and what are the requirements for self-employed with FHA and USDA. So if you haven't seen my other videos on FHA and USDA, I highly recommend that you check those out on my podcast, on my YouTube channel. But basically, Jay, so with FHA and USDA, they're government loans, right? So they require full documentation. They're not no-doc loans. They're not private loans. They want to see full disclosure of your tax returns. So they want to see your last 2 years of your personal and your business tax returns, right? And you have to show a profit. If you don't show a profit, you're not going to be able to qualify for an FHA or a USDA loan. So you have to show last 2 years of W-2s or tax returns, all the pages. You cannot use bank statements for this program. You have to show your tax returns for the last 2 years for FHA and USDA. And depending on the program, like USDA, you have to have the maximum debt ratio is like 45%. FHA, the maximum debt ratio is 56%, but they want to see those. Okay, and if you're in a year like 2019 and you're past October, they're going to want to see the 2018 tax returns too. You have to disclose all the pages. If you have a loss, they're going to hit you with that loss and take it out of your gross income. So you have to show a profit, and you have to disclose if you have any K1s or business owners or partners. That information has to be disclosed if you own more than 25% of a business. But that's a great question, Jay. That's what they look for, what lenders look for and brokers look for when they're trying to approve you for an FHA or USDA loan. So great question. This is from, this is a question from Tarquan Perriman. Thank you, just sent this over a few hours ago, and you're saying, we love your show. Thank you very much for watching it. I want to answer a question. How much capital is needed to start up a business? I'm a grown man, I'm 36 years old. I want to start a business. How much capital is needed? Thank you, Tarquan. That's a very good question. Well, I can tell you, I started my business with zero. Apple, I'm going to be posting a picture on my Instagram. Apple started out of a garage. Now it's the richest company in the world. Hey, listen, you don't need a lot of money to start a business. You just need to have a great idea and in the beginning, and you need to work your butt off. And another thing I think that's very important is that you have mentors or coaches that can guide you and show you along the way so you don't waste a lot of time. A lot of people say, well, experience is the best teacher. I think that's partially true. I think if you have a coach or a mentor that can show you to, if it's a 10-step process, to take it down to 2 steps so you can achieve your goal faster, it's better to have a mentor. Like I do a lot of coaching for people. I help people to coach them and develop them so they become better. I have coaches, I have mentors. That LeBron James has a coach. If LeBron James is the coach, I need a coach, you need a coach, right? So my thing is that find a coach, find a mentor, whatever you want to be good at, whether you're a dancer, an actor, investor, banker, find the best and learn from them, master them, see if you can shadow under them. Shadowing and coaching, mentoring is the best teacher. So, but you don't need a ton of money to get started. And then later on you can build a team and then you can raise capital. The first thing is have a great idea. And go after it, find a coach that can teach you and show you the way. So thank you, Tarquan, for asking that great question. So let's see, what else do we got? So, okay, this is from Rhonda Payton. Thank you, Rhonda, for posting this question. How to be successful as a loan officer. Yeah, did you know we actually have a real estate university? You can see all my videos and sign up for Real Estate University below. You can also check out all the videos I've done on Real Estate University. How do you become a successful LO? You have to study from the best. That's why I built Real Estate University. You can actually sign up for that. We have a great offer right now for Real Estate University for only $49 a month. It's usually $99. I cut the price in half so you guys can actually get signed up for Real Estate University. You can call our marketing manager, Jeff. He can hook you up with a Real Estate University, or you can click on the link below to get signed up for Real Estate University. But you have to first have the knowledge, understand the products, right? Have great pricing, and be able to close those loans. If you love to sell, you love to help people, you love to work with people to help them to accomplish their dreams of home ownership, that's a key component number one, right? You love to help people. As far as real estate, you want to help them to get their deal, get their home, be able to qualify. Understanding the product, studying under like Real Estate University, mastering FHA, mastering USDA, VA, understanding the guidelines so that when you talk to an applicant, you can make sure they can actually get approved for the loan. So mastering the guidelines, working for a great company that has great interest rates, fast service. Like my company, we work very, very hard to have fast service, great interest rates. So that way, now you have the customer, you have the product, now you have to be able to close them, right? You look at some of the best companies, Apple, you look at Wynn Entertainment, Steve Wynn, you look at Facebook, you look at Alibaba, look at Amazon with Jeff Bezos, right? Great prices, great service. That's the key to success, right? If you want to have a great company, right? Great service, great products, that's the key. So if you want to become an awesome loan officer, study from the best, sign up for Real Estate University, or go to someone else's course. It doesn't matter, but get the knowledge, get good knowledge, and then work for a great company that has great programs, great interest rates, fast service, so that way you can add the most value to your customer, to your client. So that's how you become a top producing LO. Guys, thank you so much for watching Confirm and Send, where I answer viewer emails and questions. If you have a question for me, send it to me directly, Angelo@chihomeloans.com. Thank you so much. If I can help you with a mortgage loan anyway, call my office at 832-431-6331. Take care, guys. Peace out. Make the most of yourself. Bye-bye.